I welcome you all for today's virtual CP program on GST input mechanism. And I welcome today's speaker, CA Deepika Ganesan. CA Deepika Ganesan is a Chennai-based chartered accountant working as assistant manager indirect taxation in FG Private Limited. She was the author of a book titled Goods and Service Tax MCQs for CA and IPC students, Faculty for Indirect Taxation for CA students, and Professional and Executive in ICAI Chennai. She was the faculty for diploma course on GST in Vaishnav College for Women. Erstwhile, she was the faculty of Indirect Taxation for CA students, faculty for certificate course for members in ICAI. She was the guest faculty on GST in various colleges. She has a strong passion towards teaching and love for indirect taxation. And she qualified the GST exam conducted by NACIN and now an accredited GST trainer also. She was selected as a faculty in Faculty Identification Program for GST conducted by ICAI. Written articles on GST and got published in Tax Guru, VAT Infoline. As a student, she was presented various papers on indirect taxation across India and won the Best Paper Presenter Award in Pune on topic service tax, reverse charge and input charge mechanism. Hyderabad on topic service tax, place of provision of service rules. Ghaziabad on topic service tax in construction industry. A renowned public speaker in various forums of ICAI and SICASA study circles. She was the executive committee member of SICASA in 2013 and 14 and organizer for seminars, study circles and cultural activities for CA students. Has a strong industrial training background in Carborundum Universal Limited of Bulgappa Group. Did her graduation in commerce in MOP Vaishnav College for Women, Chennai, and active practice. Participated in and winner in various intercollegiate and intra-collegiate events. She awarded Aravi Tulir in Queen Mary's College on Women's Day. This is the brief introduction about today's speaker, Deepika Ganesan. Members, as you know, from 1st October onwards, the input tax credit mechanism, while Section 16BA of the CGX Act made, as per the additional condition, the ITC restricted in GST or 2B should not be restricted as per the provisions covered under Section 38. Members, all of us know the input tax mechanism, the law itself, but the changes made from 1st October was only the disclosures in filing the returns. I request our speaker to concentrate on the how to and practical issues in filing the GSR 2B and 3B returns. Thank you, madam. Thank you very much. Now I request you to please continue your questions.
Thank you, sir, for the introduction. So I'll share the screen now.
Yeah.
So hope you are all able to see my screen.
Yes.
So today's discussion, we will see the entire input tax credit under GST. So we have the sections starting from 16 to 21 and rules starting from rule 36 and it goes on till rule 45. So these are the rules and the sections which are covered under input tax credit. So first, let us see from section 16 subsection 1. So who's eligible to take input tax credit? First of all, whenever you have to take input tax credit, you should be a registered person. Unless and until you are registered under GST, you are not eligible to take input tax credit. Point number 2, whatever goods or services which you have procured, it should be used in the course or furtherance of business. Only then you can take that input tax credit and that amount will be credited to the credit ledger. Apart from the eligibility, we have certain conditions to be fulfilled. So no registered person shall be entitled to the credit unless and until he satisfies all these conditions. So what are the conditions? He is in possession of tax invoice or debit note issued by the supplier. So you should have the tax invoice. Without the invoice or the debit note, we cannot take the credit. and you should have actually received the goods or services in your premises, be it factory or godown or office, whatever it is, you should have received the goods. Exception is job work and bill to ship to model. So what is job work? Whenever you apply a process or treatment on other person's goods, then it is job work. So what happens in job work? What he will do is the supplier, instead of sending it to the recipient, he will directly send it to the job worker. On the instructions of the recipient, he will directly send to the job worker. So the recipient did not receive the goods, but still he can take input tax credit. That is the exception. Bill to ship to model. What is bill to ship to? Billing to one party and shipping to the other party. Say for example, Mr. A is in Tamil Nadu and he is going to supply goods to Mr. B in Kerala. Now Mr. B has his own factory in Coimbatore, Tamil Nadu. So what B instructs Mr. A is, instead of sending it to Kerala, you send the goods to Coimbatore. So he will bill to Kerala but ship to Coimbatore. According to the place of supply rules, in bill to ship to model, it is the location of the billed party. So Kerala will be the place of supply, but shipping is done to Coimbatore. But still that Kerala registration can take the input tax credit. Though he has not received the goods in Kerala, still he is eligible to take the input tax credit. Next, subject to the provisions of section 41. The tax charged in respect of such supply has been actually paid to the government, either in cash or through utilization of input tax credit. So we have to make sure that the supplier has actually paid the tax to the government. So what is subject to section 41? The provisions of section 41 says you are eligible to take the credit provisionally. So later on, if there is a mismatch, then you will get a notice. Then the other person has actually furnished the return under section 39. That is, the recipient has furnished the return under 3B. Apart from this, one amendment which was made is only whatever credit is matching with GSTR 2B. So you have your purchase register. So whatever is matching with GSTR 2B, that only we can take the credit. So suppose in purchase register it is 100, in 2B it is 80. So whatever is matching 80, only 80 can be taken. So first was when the rule 36 sub rule 4 was introduced, first they allowed the credit, like whatever is matching plus 20%, then they brought down to 10%, then it was brought down to 5%. Now only what is matched, that alone you can take the credit. Next, what are all the documentary requirements for claiming the input tax credit? You should have the invoice. And apart from that, in case of reverse charge mechanism, where the supplier is unregistered and the recipient is registered, he has to issue a self invoice. Apart from that, you should have a debit note in case a debit note is issued under section 34. So what is debit note? Whenever the tax value of supply, that is the taxable value which is indicated in the reflected in the invoice, is actually lesser than the actual taxable value, you can issue a debit note. In case of imports, you should have a bill of entry. Then if there is any credit distributed by input service distributor, then we should have the input service distributor invoice or the input service distributor credit note. So these are all the documents which should be present with us in order to be eligible for taking the input tax credit. Section 36 rule 36 sub rule 3, what it says is, no ITC shall be availed by a registered person in respect of any tax that has been paid in pursuance of any order where any demand has been confirmed on account of fraud, willful misstatement, or suppression of facts. So whatever tax you are paying on account of order or demand which you receive, that you cannot take input tax credit. Rule 36 sub rule 4. No input tax credit shall be availed by the registered person in respect of invoices or debit notes, the details of which are required to be furnished under section 37 subsection 1, unless and until the details of the invoices or debit notes has been furnished by the supplier in his statement, that is either in GSTR 1 or using its IFF, and that will be auto-populated to us in GSTR 2B. So only then we are eligible to take the credit. Unless and until the invoices are reflected in GSTR 2B, we are not eligible to take the credit. Next, goods received in lots or installment. So we have goods which we receive in lots. Say for example, 10 crore worth of goods. So 2 crore worth of goods comes in first shipment. then another 2 crore in second shipment, third shipment. So likewise, we are getting in different date. So when are we eligible to take the input tax credit? Only on the receipt of last installment. Next is reversal of input tax credit in case of non-payment of consideration. So we are eligible to take the input tax credit once we are a registered person, we are using it for business purpose, and we satisfy all the conditions. But in case we don't pay to the supplier the value of supply and taxes within 180 days from the date of invoice, then whatever input tax credit we have taken, we have to reverse it along with interest at the rate of 18% per annum. So per annum interest is 18%. So that will apply from the date of taking credit till the date it is reversed. So that is what is the reversal. What are the exceptions to this reversal is supplies on which tax is payable under reverse charge. So under reverse charge mechanism, the recipient is only liable to pay the taxes. So in that case, this rule will not apply. Deemed supplies. So whatever is coming under schedule 1, that is what is deemed supplies. Additions made to the value of supply on account of supplier's liability in relation to such supplies being incurred by the recipient of the supply. So whatever recipient has, so whatever the supplier has to incur, if it has been incurred by the recipient, for this rule will not apply. Section 16 subsection 2 proviso 3, re-availing of credit. So we have not paid to the supplier within 180 days. Then we have to reverse the credit. But after some point of time, we pay the amount, the value, the taxable value as well as the tax amount. Then we can re-avail the credit. Whatever we reversed, we can re-avail the credit. For re-availing the credit, the time limit will not apply. So what is the time limit? Maximum time limit as per section 16 subsection 4. This is an amendment. Earlier it was September month's return, but now they have amended stating that it is 30th November following the end of the financial year to which the invoice or debit note pertains, or furnishing of relevant annual return, whichever is earlier. So the due date for furnishing annual return is 31st December from the end of the financial year. So for financial year 21-22, the due date is 31st December 2022. So in case we are filing it much earlier in August itself, then August only will be earlier. Within that date, we have to take the credit. In case we are filing only on 31st December, then obviously 30th November will be earlier. So 30th November. So when we can, where we can claim the credit is only in 3B. So 3B, the due date is 20th of the following month. So following month is, say for October, you have to file on 20th November. So ideally 20th November, you have to take the credit. In case you are filing it late, the 3B you are filing it late, then the maximum time is 30th November. But the late fee for 3B will apply. So ideally it will be 20th November in case you're going to file within the due date. 16 subsection 3, depreciation on tax component of capital goods and ITC on tax component of capital goods are mutually exclusive. So what does this mean? So we have 100 crore machinery. So on that 12% is the tax. So it is 12 crores. So if you are claiming depreciation on 100 crore, we can take the 12 crore credit. But if you are claiming depreciation on 112 crores, then we cannot take the credit of 12 crores. So either depreciation or input tax credit, either of them. Next, with this we complete section 16. Moving on to section 17. We have 17 subsection 1, 2, 3, read with rule 42. The goods or services or both used by the registered person. They are used partly for business, partly for other than business. Used partly for affecting taxable supplies, including zero rated supplies, partly for affecting exempt supplies. So if you're using partly for business and partly for non-business, whatever is pertaining to business only you can take. And partly for affecting taxable supplies, including zero rated supplies, and partly for affecting exempt supplies, you can take the credit only which is pertaining to taxable supplies, including zero rated supplies. So partly for affecting exempt supplies. So what is exempt supplies? Supply of goods or services which attracts nil rate of tax or which is wholly exempt from tax under the section 11 of CGST Act or section 6 of IGST Act and includes a non-taxable supply. What is zero rated supplies? Supplies to SEZ and exports. They both are zero rated supplies. So let us see the formula by which we can calculate the input tax credit. So T is total credit. Out of the total credit, we have input tax credit pertaining to other than business, that is T1. Input tax credit pertaining to affecting exempt supplies, that is T2. Input tax credit pertaining to block credit, that is section 17 subsection 5 ineligible credit. So then we have the common credit. C1 is equal to T minus other than business T1, T2, T3. So all this we deduct, we get the common credit. Out of that common credit, whatever is used exclusively for affecting the supplies other than exempted but including zero rated supplies, that we have to deduct. So that will be C2. Out of that C2 will be taken to the electronic credit ledger. The common credit will be taken to the electronic credit ledger. Then after that, we have to find out what is D1, D2, and the C3. So D1 is input tax credit attributable towards the exempt supplies. So E by F into C2. So that is nothing but aggregate turnover of exempt supply during the tax period divided by total turnover into the common credit. So aggregate turnover of exempt supplies, F is the total turnover in the state of registered person during the tax period. D2 is pertaining to non-business purpose. So that is nothing but C2 into 5%. So out of C2, deduct this D1 and D2 and remaining is the common credit. So whatever D1 and D2 we calculated, we have to add it to the output tax liability of the registered person. And whatever C3 we are computing, that should be computed separately for CGST, SGST, UTGST, and IGST. Now, after calculating month on month, then we have to calculate for one full year. The exempt supplies, which we are talking about, the value of exempt supply shall not include the value of activities or transactions specified in Schedule 3, except those which are specified in para 5 of the said schedule. So only this para 5, supply of sale of land, sale of building subject to para 5B, only that will be included. And whatever supplies on which recipient is liable to pay tax under RCM, that will be completely included in exempt supplies. Now, if you take goods transport agency service, now in under goods transport agency service, the recipient is liable to pay the taxes. So for the supplier, whatever services he supplies, that will be taken as exempt supplies for this section. Transactions in securities will be taken as exempt supply for this particular section. Supply by way of deposits, accepting deposits, extending loans or advances, where the consideration is either interest or discount. So if the consideration is represented by way of interest or discount, that will not be included under the value of exempt supplies. But if it is going to be provided by a banking company or NBFC or financial institution, then that will be included under the value of exempt supplies. Transportation of goods by a vessel from the customs station of clearance in India to a place outside India, that will be included under exempt supplies. Then ITC. So this D1 and D2 we have to calculate again. We have to calculate the finally. ITC shall be finally calculated for financial year before the due date for furnishing the return for the month of September. Now this will be amended to 30th November, so we can calculate in October also. So if aggregate of D1 and D2, which is calculated now finally, exceeds the aggregate of D1 and D2 calculated, which already monthly, then whatever excess amount is there, that has to be reversed by the registered person in form GSTR 3B or through form GST DRC3, the month not later than the month of September following the end of the financial year. Now the September is taken to November, 30th November. And the said person shall be liable to pay interest at the rate of 18% on excess amount. And for the period starting from the first day of April till the date of payment. So if it is financial year 21-22, first day of April, that is 1st April 2022, from that period till the date of payment, the interest will be charged. In case whatever D1 plus D2, which you calculated finally, is less than the aggregate of D1 plus D2, which is calculated already, whatever excess amount is there, you can claim it as credit at least before 30th November. Determination of input tax credit in respect of capital goods and reversal thereof. So whatever we saw was for input and input services. Now we are going to see for capital goods. So capital goods also we have partly used for business, partly used for other than business, and partly used for affecting taxable supplies, including zero rated supplies, and partly used for affecting exempt supplies. Now let us see the calculation. So ITC on capital goods, we have class A, class B, and class C. So what is class A? Class A is amount in respect of capital goods used or intended to be used exclusively for non-business purpose or exclusively for effecting exempt supplies. So what is this? Whatever you use it for non-business purpose and you use it for exempt supplies, that will not be credited to the electronic credit ledger. Shall not be credited to electronic credit ledger. Class B, ITC in respect of capital goods used or intended to be used exclusively for effecting supplies other than exempted supplies, but including zero rated supplies. So other than exempted supplies, but including zero rated supplies, that is your exports and supplies to SEZ, then that you can take it to the electronic credit ledger. We can take the credit. Next, other than this two, amount of ITC in respect of capital goods which is not covered under A and B, that is capital A, that will be credited to electronic credit ledger. So proviso one, what it says, where capital goods earlier covered under class A is subsequently covered under class C, then the value of the value of capital A shall be credited to the electronic credit ledger subject to the condition that ineligible credit attributable to the period during which the capital goods were covered under class A, denoted as TIE, shall be calculated at rate of 5 percentage points per quarter or part thereof, and it will be added to the output tax liability. So whatever was under class A, if it is subsequently covered under class C, then what we have to do is whatever is pertaining to ineligible, that ineligible credit, we have to calculate 5 percentage points per quarter and subtract it, and remaining we have to take it to the output tax liability. The amount of TIE shall be computed separately for input tax credit for CGST, SGST, and IGST separately. Then the aggregate of the amount of capital A credited to the electronic credit ledger under class C in respect of common capital goods whose useful life remains during the tax period to be denoted as TC. So for common capital goods, we will denote it as TC and shall be the common credit in respect of such capital goods. So any capital goods earlier which is covered under B is subsequently covered under C, then the input tax credit claimed in respect of such capital goods shall be added to arrive with the TC, because B is which is used exclusively for business purpose and for effecting the taxable supplies, including zero rated supplies. So whatever, if it is subsequently covered under the class C, then we have to add it. So generally the life of the capital asset is taken as 5 years. So 5 years means 60 months. So we have to compute monthly. So TM, that's what is monthly. It's equal to TC by 60. So then we have to calculate whatever is pertaining to exempt supplies. That is nothing but E by F, aggregate value of exempt supplies made during the tax period divided by total turnover in the state of a registered person during the tax period, that into TR. TR is nothing but aggregate of all the capital goods, that is TR. Suppose if you don't have the turnover during the set tax period, you can take the previous tax period's turnover. TE should be computed separately for CGST, SGST, UTGST, and IGST. And whatever is computed TE, that has to be declared in GSTR 3B along with applicable interest at 18% per annum, and shall every tax period and useful life of the concerned capital goods, it shall be added to the output tax liability for the person who's claiming the credit. So rule 45 sub rule 4 explanation, what is this value of exempt supply for land and building? It is stamp duty value. In case of security is 1% of sale value of security. Next we are going for banking company. So ITC in case of banking company. In case of banking company or a financial institution, including an NBFC, then we have two options. The first option is you can take credit which is pertaining to the taxable supplies, including zero rated supplies. The exempt supplies and all, you can leave it. Option 2, from the total credit, subtract what is used for non-business purpose, subtract what is the ineligible credit, that is 17 subsection 5, totally block credit, you subtract that, Remaining out of that, you have to calculate 50% of the eligible credit. And this 50% will not, the restriction will not be applicable in case you are procuring any goods or services from the person having the same PAN number. That restriction will not apply. So 100% credit you can take in that. Say for example, you take State Bank of India, Tamil Nadu, State Bank of India, Kerala. Now State Bank of India, Kerala is obtaining any services from State Bank of India, Tamil Nadu. Now it is coming under the same PAN. So they can take 100% credit. That 50% restriction will not apply for this. Otherwise, if you have opted for this 50%, option 2, you have to go with that. Once you have opted for this for the full financial year, this option shall remain. We cannot change it in between. So we have to opt for this in the beginning of the financial year. Now let us move on to section 17 subsection 5, ineligible credit. So this is very important. This is also known as block credit. So in this cases, we cannot take the credit at all. It will go as expense. So first one is motor vehicles. If the motor vehicles having the seating capacity not more than 13 persons, including driver, then we have to check whether it is used for the following taxable supplies. Further supply of motor vehicles. So your business itself is buying and selling motor vehicles, then you cannot take the, you are eligible to take the credit. If your business is transportation of passengers, then without a motor vehicle, you cannot transport passengers. So then you are eligible to take the credit. Imparting training on driving motor vehicles. So driving school. So in that case, you can take the credit. Next, if it is used for any other purposes, then you cannot take the credit. But suppose if the motor vehicle is having a seating capacity of more than 13 persons, including driver, then ITC is available. So this is the definition of motor vehicle I have taken from the Motor Vehicles Act. Next is vessel and aircraft. If the vessel and aircraft are used for the following purposes: further supply of vessel and aircraft, buying and selling of vessel and aircraft, or transportation of passengers, imparting training on navigating such vessels, imparting training on flying such aircraft, then ITC is available. If it is used for any other purposes other than A, then no ITC is available. 17 subsection 5 clause AB, services of general insurance servicing, excuse me, repair and maintenance, insofar they relate to motor vehicles, vessel or aircraft, which is referred to in clause A or AA, which we saw in the previous subclasses. So if the motor vehicle or the vessel or aircraft, which is, if it is used for the purposes specified for that, like transportation of passengers, transportation of goods, and it is imparting driving skills or further selling of motor vehicles, then you are eligible to take the credit in case of insurance, general insurance servicing, repairs and maintenance. Where such services are received by a taxable person engaged in the manufacture of such motor vehicles, vessels or aircraft, or in supply of general insurance services in respect of such motor vehicle, vessel or aircraft. So suppose if these services, insurance, servicing, repairs and maintenance, they are received by the person who is manufacturing the motor vehicle, vessel or aircraft, he can take the credit. Suppose if it is received by a person who is doing this insurance service, then he can take the credit. Other persons cannot take the credit. This is ineligible credit. Next, food and beverages, outdoor catering, beauty treatment, healthcare service, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicles, vessel or aircraft referred to in clause A or AA, except when they are used for the purposes specified therein, life insurance and health insurance. Now, this food and beverages, we cannot take the credit. We can see in companies, persons go for travel, they stay in a hotel, they also take food. So food, we cannot take credit, it will go as expense. Outdoor catering, no credit. Beauty treatment, we cannot take credit. Healthcare service, cosmetic, all these we cannot take credit, except when they're used for the specified purposes. Motor vehicle, if they're used for the specified purposes, then you can take the credit. Specified purposes means like transportation of passengers, transportation of goods, imparting driving, further supply of motor vehicles, then you're eligible to take the credit in case of hiring or renting of motor vehicles. Now, this food and beverages, outdoor catering, beauty treatment, healthcare service, all this you're eligible to take the credit, provided your inward supply of goods or services or both, which is used by the registered person for making an outward supply of the same category of goods. your inward supplies and the outward supply are same, then you're eligible. Say for example, beauty treatment. Say you are providing beauty parlor service. You have engaged an assistant. So you get the service from her. So your inward supply is also same, your outward supply is also same. Then you're eligible to take the input tax credit. If suppose it is used for any purposes other than which is mentioned under A, then no ITC is available. Next, membership of a club, health and fitness center. If a company has taken a membership of any club, be it Toastmasters club or cricket club, whatever it is, then they cannot take the credit. Health and fitness center, say any gym or fitness center is attached to it. So then you are ineligible to take the credit. Travel benefits which are extended to employees on vacation, such as leave or home travel concession, then you are not eligible to take the credit. Suppose if it is obligatory for the employer to provide all these services, then input tax credit is available. Otherwise, no input tax credit. 17 subsection 5 clause C is pertaining to works contract service. So what is works contract service? So works contract service is a joint contract consisting of both goods as well as service. Now, in GST, works contract service is pertaining to immovable property. So if you want to make a table, chair, there also you need both goods as well as labor. But still that will not be called as works contract, because in GST they have clearly defined as works contract is pertaining to only immovable property. So when the works contract service is used for construction of immovable property, if it is plant and machinery, yes, you can take credit. If it is going to be other than plant and machinery, then we have to check whether it is an input service for further supply of works contract service. If it is yes, ITC is available. If it is no, ITC is not available. So what does this mean? Further supply of works contract. Say for example, you have KG builders. They have got a contract from Infosys to construct a building. So then in that case, they have outsourced that to another person. They have outsourced this work to another builders. Now this KG builders can take the credit because their inward supply is also works contract, outward supply is also works contract. So they are eligible to take the credit. Otherwise, Infosys cannot take the credit because their outward supply is different, inward supply is different. You are not eligible to take the credit. Next, goods or services or both received by a taxable person for construction of immovable property other than plant and machinery on his own account, including when such goods or services or both are used in the course or furtherance of business. So when you're constructing an immovable property, you can get goods separately, labor separately. So in this case, the goods or services or both, which is received by a taxable person for construction of immovable property, we have to check whether it is capitalized in the books of accounts. If it is capitalized, that is taken as balance sheet item, you cannot take the input tax credit. If it is taken to P&L, then we are eligible to take the input tax credit. Apart from this, goods and services which are used for personal consumption, we cannot take the credit. And goods and services on which tax has been paid under section 10, that is composition scheme, then we are ineligible to take the credit. 17 subsection 5 clause F, goods or services are both received by a non-resident taxable person. So who is a non-resident taxable person? One who comes from outside India and does a business in India, and where he does not have a fixed place of business, nor he has a residence in India. So when he comes here, he has to take a separate registration as a non-resident taxable person. And he also has to take advance deposit of tax. Only then his registration will be confirmed. So if he is going to receive any goods or services, then he is ineligible to take the credit. Only on the goods imported by him, he can take the credit. Goods lost, destroyed, or stolen, or written off, or disposed by way of gift or fine. So if the goods are lost on the way, then we are not going to supply the goods. So when you are not going to supply the goods, you will not be paying the taxes. So in that case, what happened? We will not be eligible to take the input tax credit. Goods stolen. So if it is stolen, again, you will not pay any taxes. There will not be any outward supplies, no taxes. So it will be input tax credit cannot be taken. Destroyed. If the goods are destroyed, you cannot take the credit. Written off. So if you are going to write off in your books of accounts, then you are not eligible to take the credit. Disposed of by way of gift or fine. If you are going to dispose of off by way of gift or fine, then you are not eligible to take the credit. So these are all the circulars which is mentioning about the free sample and gift. So what happens in the common parlance, what they will do, they'll give some samples. Like if you take medical medicines and all, will be given by the practitioners as samples without charging any consideration. So when there is no consideration, it is not treated as a supply at all. So when you will not be paying any taxes, so you cannot take any input tax credit on that for that. Section 17 subsection 5, what it says, ITC will not be available in case of goods lost or stolen or destroyed or written off or disposed of by way of gift or free samples. So ITC will not be available to the supplier on input services or capital goods to the extent they are used in relation to the gift or free samples which are distributed without any consideration. Suppose if you receive any consideration, then you're going to pay tax and it will be, you can take ITC. However, whether the activity of distribution of gifts or samples fall within the scope of supply, we have to check Schedule 1, whether it is deemed supply or not. Then we can take ITC. Buy one, get one offer. So whenever there is buy one, get one. So one product you get free of cost. So in this case, one item is supplied free of cost without any consideration. So it is not an individual supply of free goods, but a case of 2 or more individual supply. So it is a mixed supply. So this will be treated as a mixed supply and tax shall be determined based on the supply which attracts highest rate of tax. ITC, in this case, ITC shall be available. Discounts, buy more, save more. So if you're going to buy for more amount, then you are getting discounts based on that. So suppliers will offer year-end discounts also. Now, if it is buy more, save more, it will be mentioned in the invoice. No problem. You can take the credit. But if it is not mentioned in the invoice, so year-end discounts and all, for that we have to check whether there is an agreement entered into before or at the time of supply. Secondary discounts. So this will not be known at the time of supply, but they are offered after the supply is over. So say the value of supply is 10. Now later on it is revalued at 9. So what happens? The credit note is issued. So you can issue a GST credit note or financial credit note. Financial credit note means the GST amount will not be there. Circular to clarify the procedure in respect of return of time barred, that is time expired drugs. So what will the pharmaceutical sector do in case of drugs or medicines which are sold by the manufacturer to the wholesaler and by the wholesaler to the retailer on the basis of invoice or bill of supply? So here what happens is the goods have a timeline. You have a shelf life, which is normally referred to as the date of expiry. Like after the shelf life is over, it will expire. So if the goods have crossed their date of expiry, then what will happen? That is what we have to check. Return of time, it will be treated as fresh supply. So in case the person returning the time expired goods is a registered person, he may at his option return the goods by treating it as a fresh supply and thereby issuing an invoice for the same. So the value of the said supply as shown in the invoice on the basis of which the goods were supplied earlier may be taken as the value of such return supply. And he shall also be eligible to avail the input tax credit. Suppose he is a composition taxpayer, he may return the said goods by issuing a bill of supply, and composition taxpayer cannot take any input tax credit. Suppose it is returned by an unregistered person, he can issue any document. Where the time expired goods have been returned to the retailer, returned by the retailer or wholesaler or destroyed by the manufacturer, then he is required to reverse the ITC which is availed on the return supply. In respect of the terms of the provisions of section 17 subsection 5 clause H. So it is to mention that ITC which is required to be reversed is the ITC availed in the return supply and not the ITC that is attributable to the manufacturer. For illustration is manufacturer has availed ITC of rupees 10 at the time of manufacture of medicines valued at 100. At the time of return of medicines on the account of expiry, the ITC attributable to the manufacturer on the basis of fresh invoice issued by the wholesaler is 15. So when the time expired goods are destroyed by the manufacturer, he has to reverse the ITC of rupees 15 and not rupees 10. Return of time expired goods by issuing credit note. So you can issue a credit note. The supplier can issue a credit note where the goods are returned back by the recipient. So the manufacturer or the wholesaler who has supplied the goods has the option to issue a credit note. And in such a scenario, retailer or wholesaler may return the time expired goods using the delivery challan. So it may be noted that there is no time limit for the issuance of credit note in the law, except with regard to the adjustment of tax liability in case of credit note issues prior to the month of September following the end of the financial year and those issued after it. So in this case, say let us take date of supply of goods from manufacturer is 1st July 2017. Date of return of time expired by goods is 20th September. So treatment in terms of tax liability and credit note. Credit note will be issued by the supplier. It can either be manufacturer or wholesaler, and the same will be uploaded by him on the common portal. So subsequently, what happened? The tax liability will be adjusted by the supplier. The provided the recipient has reversed his input tax credit. Case 2, 1st July 2017, 20th September 2018. The credit note will be issued by the supplier, but there is no requirement to upload the same on the common portal. Subsequently, the tax liability cannot be adjusted by the said supplier. Next, 17 subsection 5 last is whatever tax is paid in accordance with the provisions of section 74, 129, 130. 74 is in case there is any short payment of taxes or wrong availment of input tax credit, or if there is erroneous refund, then there will be demand and recovery procedure in case of fraud. 74 will apply in case of fraud. What is 129 and 130 in case of seizure and confiscation and seizure? So if you have not carried the invoice or if there is no e-way bill, so all these cases, the goods will be seized. In that case, you have to pay the tax penalty and take the goods. For those cases, you cannot take the credit. So this is section 17. Let us move on to section 18. Credit under special circumstances. A person who has applied for registration under this act within 30 days from the date on which he becomes liable to registration. So this is new registration he is going to take under GST. So if he has applied within 30 days from the date of becoming liable, that means his threshold limit, the turnover has crossed the threshold limit, so he is becoming liable for registration. So he can take input tax credit in respect of inputs contained in semi-finished goods, finished goods which are held in stock. A person who takes voluntary registration can also take the credit of pertaining to input contained in semi-finished goods, finished goods which are held in stock immediately preceding the date of grant of registration. So voluntary registration means you have not crossed the threshold limit and you are also not coming under compulsory registration, but still you are registering yourself. So you can take this credit pertaining to the previous stock immediately preceding the date of grant of registration. In the first case, immediately preceding the date from which he becomes liable to pay the taxes. And in case of person who ceases to pay tax under section 10, so from composition he comes to regular scheme, then he can take credit of inputs contained in semi-finished goods, finished goods, and capital goods held in stock immediately preceding the date from which he becomes liable to pay tax under section 9. So that means section 9 is regular scheme. So immediately preceding that date, whatever stock you had, you can take input tax credit. And in case of the exempt supply becoming taxable supply, so we are eligible to take the credit immediately preceding the date from which the supply becomes taxable. But for all these cases, in case of capital goods, the life of the asset is taken as 5 years. So whatever period it was used, that has to be deducted by 5 percentage points per quarter, and remaining only we can take credit. So in all these cases, the registered person will have to file a form called Form GST ITC 01. And he is eligible to avail the ITC in respect of inputs contained in semi-finished goods, finished goods, and capital goods held in stock. So all these cases, he has to file GST ITC 01. And if suppose the whatever amount he is going to claim, ITC is going to claim is going to exceed 2 lakhs, then he has to file a declaration furnish a declaration which shall be certified by a practicing chartered accountant or a cost accountant if the aggregate claim it exceeds rupees 2 lakhs. And whatever ITC is claimed in accordance with section 18 subsection 1 class C and D, that will have to be verified with the corresponding details furnished by the supplier, corresponding supplier in GSTR 1 or GSTR 4. Now, what 18 subsection 2 says is whatever credit we saw in 18 subsection 1, that we can take only pertaining to 1 year old stock. Say, for example, today, 11th November 2022, you are eligible to take this credit, means previous day is 10th November. So, maximum you can take 1 year old stock. So, 10th November 2021 onwards till 10th November 2022, that stock only you can take the credit. Age old stock, you cannot take the credit. That's what they are mentioning here. Rule 8, section 18, subsection 3, read with rule 41. When the section will apply, the section applies when there is change in the constitution of a registered person on account of sale, merger, demerger, amalgamation, lease, or transfer of the business with the specific provisions for transfer of liability. So whenever there is sale, demerger, merger, amalgamation, all the assets and liabilities will get transferred. Along with that, input tax credit will also get transferred. So what the transferor should do is he has to file a form called GST form ITC 02 electronically in the common portal, along with the request for transferring the unutilized ITC. Now, in case of demerger, ITC will be apportioned in the basis of ratio of value of assets of the new units as specified in the demerger scheme. So for this, the transferor will have to submit a certificate issued by the practicing chartered accountant or a cost accountant, certifying that sale, merger, demerger, amalgamation, lease, or transfer of business has been done with a specific provision for transfer of liabilities. Now, what the transferee has to do is he has to accept the details. The transferee shall accept the details furnished by the transferor on the common portal. Upon such acceptance, unutilized credit specified in form GST ITC 02 shall be credited to his electronic credit ledger. The inputs and capital goods so transfer shall be duly accounted by the transferee. So we have to accept, the transferee has to accept the credit. What the circular says, on the death of the sole proprietor, if the business is continued by any person being transferee on successor of business, that will be construed as transfer of business. So 18 subsection 3 allows the registered person to transfer the unutilized ITC lying in the electronic credit ledger to the transferee in the manner which is specified under rule 41. As per section 85 subsection 1, the transferor and transferee shall jointly and severally be liable for any payment of tax, interest, or penalty due from the transferor in case of transfer of business, in case in whole or part, by sale, gift, lease, or license hire, or any other manner. Now, section 93 subsection 1 of the CGST Act provides that where a person who is liable to pay tax, interest, or penalty under the CGST Act, he dies, then the person who continues business after his death shall be liable to pay the tax, interest, or penalty due from such person under the CGST Act. It is therefore clarified that transferee or successor shall be liable to pay tax, interest, or penalty due from the transferor in case of transfer of business due to the death of sole proprietor. Next, we are going to see Rule 41A, transfer of credit on obtaining separate registration for multiple place of business. So GST, it is not centralized registration. We all know it is state-wise registration, but within the same state itself, if you want to take separate registrations, like in Tamil Nadu, you have Chennai, Coimbatore, Madurai, means you can take, it is not mandatory, but if you want, you can take separate registration for all the 3 places. So if in case the separate registration is taken, then you have to transfer the ITC. So ITC, for that you have to file a form called Form GST ITC 02A within a period of 30 days from the date of obtaining separate registrations. So what will be the formula? Value of assets held by newly registered entity at the time of registration divided by total value of assets held by the undivided entity. So total assets by the Tamil Nadu registration into ITC. The newly registered person, that is the transferee, will have to accept the details which is furnished by the transferor. Upon that acceptance, the unutilized ITC, which is specified in Form GST ITC 02A, shall be credited to the electronic credit ledger of the transferee. Next is 18 subsection 4, read with Rule 44, where any registered person who has availed ITC, he opts to pay tax under Section 10, that is composition scheme. Now, where the goods or services or both supplied by him became wholly exempt. So that means you are no longer eligible to take the credit. When you come under composition scheme, you are no longer eligible to take the credit. Or when your goods or services or both supplied has become wholly exempt, you are not eligible to take the credit. So in that case, you have to reverse the credit pertaining to the ITC in respect of inputs. Inputs contained in semi-finished goods, finished goods, capital goods held in stock on the day immediately preceding the date of exercising such option or the date of such exemption. After paying the amount, if there is any balance ITC, that will lapse. So reversal shall be determined specifically, separately for IGST, CGST, SGST, and UTGST. Suppose if you don't have the tax invoices, then what will happen? You can take the prevailing market price. Compliance, what you have to do is you have to file one form called Form GST ITC 03. And in case of cancellation of registration, we have to file Form GSTR 10. Certificate by a practicing chartered accountant or cost accountant. So the amount determined for reversal shall be duly certified by a practicing chartered accountant or a cost accountant. Next, 18 subsection 6, read with Rule 40 sub Rule 1. When this section applies, in case of supply of goods, capital goods or plant and machinery, and ITC on capital goods has been taken. So what is the consequences? The registered person will have to pay an amount equivalent to ITC taken on said capital goods or plant and machinery with and reduced by 5 percentage points per quarter. So per how the quarter is determined: January to March, April to June, July to September, October to December. So that is how the quarter is determined. Or tax on transaction value. Transaction value means the sale value of the capital goods. Whichever is higher, that amount has to be paid back. In case of refractory bricks, molds, jigs, dies, and fixtures, which is sold as scrap, directly you have to take tax on transaction value. Suppose ITC less 5 percentage points per quarter is greater than tax on transaction value, then that amount has to be specified in GSTR1. Next is section 19, read with Rule 40, section 43 and Rule 45. Goods sent to job worker. So when we all know who is a job worker, so goods has been sent to the job worker under the cover of a delivery challan. Then the challan will be issued by the principal to the job worker as per section Rule 55. What are the compliances? We have to provide the details of challan in respect of goods dispatched to the job worker, goods received from a job worker, or goods sent from one job worker to another job worker during a quarter for a specified period. Then this has to be included in Form GST ITC 04 furnished for that period on or before 20th of the month following the said period. So it is going to be half yearly. If your turnover is going to exceed 5 crores, it is half yearly. If it is not exceeding 5 crores, it is annual. So what is the time period within which the goods has to be returned? For inputs, it is 1 year. For capital goods, it is 3 years. If it is returned within 1 year, then no reversal of ITC. If it is not returned within 1 year, then ITC shall be reversed. It shall be treated as deemed supply and it shall be declared in Form GSTR 1. Interest at the rate of 18% shall be paid from the date of taking the credit till the date of payment. If it is pertaining to capital goods, if it is molds, jigs, dies, fixtures, then 3-year period time limit will not apply. If it is others, if it is received within 3 years, no reversal. Otherwise, we have to reverse the ITC along with interest we have to pay. Now, this time period can be extended by the commissioner further period not exceeding 1 year in case of inputs and in case of capital goods by 2 years. So what is specified periods? Period of 6 consecutive months commencing on the first day of April till the date of October. So till the date of September and first day of October till March. In respect of principal whose aggregate turnover during the immediately preceding financial year exceeds 5 crores and in any other case annually for a financial year. Next is section 20, that is input service distributor. So who is an input service distributor? So input service distributor is a person who distributes a credit pertaining to common services. So audit, consultancy fees, all this will be happening in the head office. So all this will be distributed to the other registrations coming under the same PAN. So how are you going to distribute? If the recipient is also located in the same state or union territory, then CGST, SGST, IGST will be distributed as it is. If it is no, CGST and SGST will be distributed as IGST. IGST will be distributed as IGST. So what are the conditions to be satisfied? The credit can be distributed to the recipients of credit against issuance of ISD invoice. And ISD shall issue an ISD credit note as prescribed in Rule 54, Sub Rule 1. for reduction of credit in case the ITC which is already distributed gets reduced. Any additional amount of ITC on account of debit note, that also has to be distributed based on the turnover. So how will you distribute? Turnover of a state divided by total turnover into the input tax credit. The C1 is equal to T1 by T into C. That is nothing but turnover in a state or in a union territory divided by total turnover into the ITC, common credit. So this input service distributor will have to file a form called Form GSTR 6. So what are the conditions? The ITC available for distribution in a month shall be distributed in the same month, and the details shall be furnished in Form GSTR 6. And the ITC, the ISD, that is input service distributor, shall separately distribute the credit and the ineligible credit as per section 17.5 and the amount of eligible ITC. And the ITC on account of CGST, SGST, UGST and IGST shall be distributed separately. Next is manner of recovery of credit distributed in excess. Suppose when you're distributing the credit for one particular state or registration, you have distributed excess credit. Then the government will recover that credit. How it will be recovered? They will use demand and recovery provision. So interest penalty will apply. Next, Rule 86A. What are the conditions? Suppose this is, if the commissioner or assistant commissioner has reasons to believe that you have whatever input tax credit you have taken is fraudulently availed or it is ineligible, then for reasons to be recorded in writing, they will not allow debit of an amount equivalent to such credit in electronic credit ledger for discharge of any liability under section 49 or for claim of any refund of any unutilized amount in following cases. So the credit of tax paid has been availed on the strength of tax invoices or debit note of any other document issued by the registered person who has been found non-existent. So if the supplier is found non-existent or he's not conducting any business, or without receipt of goods you have availed the credit, the registered person who is availing the credit is found non-existent or not to be conducting any business, or he has not paid the tax, the supplier has not paid the tax to the government, the registered person is not in possession of the tax invoice or debit note, then you cannot avail the credit. Then the commissioner or the officer, what he has to do is, suppose if he is satisfied that this disallowing does not exist at all, then he will allow the debit. Otherwise, this restriction will apply. What are the restrictions as per Rule 86B? Rule 86B restricts the credit to 99% of the, you can utilize the input tax credit only to the extent of 99% to pay your output tax liability. Then when your value of supply other than the exempt supply and zero rated supply in a month exceeds 50 lakh rupees, but this restriction will not apply provided the said person, that is being proprietor or karta or managing director, they have paid more than 1 lakh rupees as income tax, or if you have claimed any refund amount of more than 1 lakh in case of unutilized input tax credit for supplies to SEZ or zero, that is exports. If you have claimed refund of more than rupees 1 lakh for in case of inverted duty structure, that is your rate of tax on inputs is higher than the rate of tax of outputs, then you can claim the unutilized input tax credit. Suppose the registered person has discharged its liability towards output tax through the electronic cash ledger. So if you have discharged through the electronic cash ledger for an amount which is excess of 1% of the total output tax liability applied cumulatively up to the said month in the current financial year. Suppose if you have discharged more than 1% using the cash ledger, then this condition will not apply. Suppose the registered person is a government department, public sector undertaking or local authority or a statutory body, then this restriction will not apply. So I'll take up the questions. So these are all the sections and rules. I'll take up the questions. First question: whether bill to ship to model is applicable to services. How about claiming the input tax credit on services received? So whenever you receive the service, you are eligible to take the credit. Bill to ship to model is applicable for only goods, not for services. Next, can ITC be availed on ocean freight paid in case of export, since exemption notification has lapsed on 30th September 2022 and ocean freight company started billing at 5% GST. So whenever ocean freight, this is reverse charge mechanism. This comes under reverse charge mechanism. That is the supplier as well as the recipient is located in a non-taxable territory, but the goods coming to Indian company. So the importer is paying the taxes. So you are very much eligible to take the credit. Supply is all taxable, nil rated and exempted goods. ITC and rent, professional service should be segregated between three and taken proportionately. Obviously, whatever is pertaining to taxable only, you have to take the credit. Can a car dealer who is placed outside SEZ sell a vehicle to an SEZ under LUT without payment of GST? Okay, so whatever you are making a supply to an SEZ, that is zero rated. So without payment of GST, he can do, if provided he has filed the letter of undertaking, he can take. Whether ITC is allowable on expenses by way of Diwali gifts given by the company to their employees. So this is a supply. You are giving free of cost only, but still you are liable to pay taxes. It will come under para 2 of schedule 1. Supply of goods or services between related persons or distinct persons. So related person, employer and employee are related persons. So if you are giving gift, then, but if the gift is not exceeding 50,000 in a financial year, then it will not become a supply. So when it is not a supply, then you cannot take input tax credit. But if it is exceeding 50,000, then it is treated as supply, you are paying taxes. So you will be taking the credit. RCM on rent and transport charges can be claimed next month. The current practice, whatever we are doing, nowhere it is mentioned that we have to take it only in the current month or next month. But what we are doing is we are taking it in the current month itself. Actually, this amount is not shown automatically in GST 3B, but in case all other credit, the eligible amount is shown, and if you claim in excess and it wants as red, but for RCM this is not shown in 3B in the input table. For every registered person, it will be warning as red, because all credits are not auto-populated properly from GST 2B. So if you change it, it will show as red only, but you can take the credit. If 100 kg goods supplied for job work but received only 80 kg due to wastage of 20 kg, whether supplier has to pay GST on 20 kg. So this is, say, can you, Dilip, can you be more specific, like what 100 kg goods are supplied? This is an input, raw material, and 20% is wastage, means then no need to pay GST is my opinion. But I want your question to be more specific. The material will be shared. Section 38. Section 38 regarding ITC. Rule 38. It's not section 38. Rule 38 in case of banking companies. So banking companies, they have two options. One option is you can either take ITC pertaining to, or only pertaining to the taxable supply, including zero rated supply. Or second option is on the entire credit, subtract your whatever is pertaining to non-business purpose, whatever is pertaining to ineligible credit, remaining credit 50% you can take. And in case if you are receiving the services, goods or services from a person who is coming under the same PAN, then you can take 100% credit. Is it mandatory to become an ISD if there is more than one registration? If there are common expenses, you have to take a ISD registration. Especially a newly registered person, time limit to take ITC immediately. See, there is time limit. Time limit is if you have not taken any credit, if it is left out, that is why they're giving the maximum time limit. Otherwise, ITC when you can take this immediately when you satisfy all the conditions. You are eligible and satisfy all the conditions, then you are eligible to take the input tax credit. So newly registered person, immediately he can take the credit when he is filing his first return. If service is provided to the branch in Tamil Nadu, but head office asked to bill to them, which is located in Delhi. In such cases, how to bill and who is eligible to take input tax credit? So you have to bill it to the Delhi location, and credit will also be taken by Delhi only. So service is provided to head of Tamil Nadu, but head office is asking to bill. So it will be in the name of Delhi registered office. So in that case, Delhi only will have to take the credit. Royalty paid to companies situated outside India. Any exemption in RCM? This is import of service, so there is no exemption. During export of goods, Indian exporter pays GST on ocean freight. charged by the Indian transporter at 5%. So whether such GST can be availed by the exporter. So for export, there is no, it is zero rated supply. So either you can apply for LUT and not pay the taxes, or you can pay the IGST and claim refund. Now this will, if you're going to pay IGST and claim refund, that is one way. If you are going to apply for LUT, whatever is there unutilized input tax credit, that you can claim as credit. So this can be claimed. Job work for repair. Can you be more specific? Is ITC available for depreciable assets? So obviously it is available provided you have not taken the ITC on depreciation. Sorry, you have not taken the depreciation on the tax component, then you are eligible to take the ITC. So these are all the questions. In chat box, I will see if there are any other questions. In case of interstate supply, the seller bills on 30th October and received by the buyer on 2nd November. Okay, the ITC to be claimed in October 3B return or November 3B return. Because if you reverse in October 3B and reclaim in November 3B, the table is in red. See, interstate supply, what happens is, I do understand your situation. So whenever you receive, after receiving the goods only, you can take the credit. We saw the condition on receipt of goods or services. So you have to claim it in November month return. Royalty paid to companies situated outside India. Whether any exemption? No. Can a homeowner claim input tax credit on construction of own house? Contract given to contractor? No, he cannot claim the credit because it is coming under ineligible credit. Okay. So these are all the questions. Any other question? I can see some more. We have 100%, 100 kg copper clamp on job work basis, but received only 80 kg material. Job worker has not returned due to wastage of material. So supplier need not pay. It is wastage. During the production, it is wastage. So supplier need not pay any GST. It will not be considered as deemed supply. So any other questions? After this, we'll see the GST R3B. There are some changes. A regular taxpayer is converted to composite dealer in subsequent year. Can previous year amendment can be done before filing September GST R3B? What amendment you want to converted? Okay, regular taxpayer is converted to composition dealer means you will be filing only GSTR4 and quarterly you will file CMP08. Whether we can make the amendment? Yes, amendment is possible. Okay, any other questions?
Question in chat box, madam. You have seen the thing Q&A part. Chat box.
Thus, vehicle hire charges paid to unregistered dealer is liable under RCM. If it is provided by other than body corporate to a body corporate, then body corporate will have to pay tax under RCM. So unregistered dealer is supplying to a registered person, means that registered person will have to pay tax under RCM. So vehicle hire charges paid to the unregistered dealer, it will be liable under RCM. Any other questions? Difference between ITC availment and utilization. There is no time limit for utilization. Whatever time limit is specified as 30th November or date of furnishing of annual return, it is only for availment. So what is availment? Availment means you are taking it in the return. That is what is availment. Utilization means you are setting off against your output tax liability. That is what is, yeah, you will get the copy. how to claim GST on bank charges when we don't have invoice and breakup. So this you have to claim using your GST or 2B only. So based on that, you have to claim the credit. So in your 2B, you will get, the bank would have filed the return, no? So in your 2B, it will be reflected. So based on that only, you can claim the credit. Elaborate. I have already elaborated section 16. Sorry, this is section 17 read with rule 38. So banking company, two options. One option is either take the credit pertaining to taxable supplies, including zero rated supplies, except for exempt supplies. Or second option is from the total ITC, subtract the ineligible credit pertaining to non-business, out of that 50%. Can we claim refund of unutilized credit on cancellation of registration? No, unutilized credit. See, refund of unutilized credit is possible only in two cases. One is, it is in case of zero rated supplies. Second is in case of inverted duty structure. So only then you can claim. Is there any restriction on availing ITC based on GST rates? The forward charge rate itself is 5%, or an input service, whether ITC is available. So say, let us take GTA service. If the GTA is charging 5%, he cannot avail the credit. 12% he can avail the credit. If claim input tax in annual return, how cancel carry forward? Can we be more specific? Whether credit strictly on 2B or on holding invoice. You should have invoice plus you have to match it with 2B. So whatever purchase register you have to match it with 2B. We have filed GSTR1 with rupees 1 crore, but in 3B with 10 crore, the actual sales was 1 crore. Can we amend the 3B? Yes, you can amend, but what happens is in 3B, it will not accept negative amount. So next month return, if you're having more turnover only, you can reduce that 9 crores. It will not accept the negative amount. And these sales are zero rated supplies. What if it is 18% rated supply, explaining taking zero rated supply, no taxes only. If you are not applied for LUT, then you have to pay taxes. So if you have mentioned as 10 crore in your 3B, then automatically the tax amount, I don't know what you have mentioned about the tax amount. If you have taken it under zero rated supply without payment of tax, then you will not have any problem. With payment of tax, if you have taken it as the tax amount also, if you have taken it wrongly, then you would have ended up paying taxes, because submit button will not be active unless and until you pay all the taxes. During export of goods, this I already answered. Can we claim ITC on commercial property purchased for giving rent purpose? No. Purchase of property, ineligible credit. Does landowner liable to pay GST if he receives advance or flat sale before completion certificate? Yes. In case of services, definitely you are liable to pay GST on advance, receipt of advance. You have to issue a receipt voucher. What are the safeguards given by the Act for the supplier to get the credit if ITC is not in 2B? There is no safeguard given. You have to chase your supplier. What are the supplies by registered dealer to unregistered covered under RCM? Only reverse real estate service. Only real estate service is coming under unregistered to registered. Petrol bunk, whether to pay GST on reverse charge and freight charges? No. Creditors not required to be paid, return back to P&L. Okay. You have returned it back. Whether GST has to be reversed since it is not paid within 180 days to them. Yes, you have to reverse the input tax credit. Inverted duty structure shortly. Your rate of, say for example, you have purchased raw materials. It is 18%. You have converted into finished goods. The finished goods is only 5%. So rate on your inputs is higher than rate on output. So that is what is inverted duty structure. Section 17. Subsection 4 deals with banking provision. Yes, obviously. Not section 38. That's what I was mentioning. Whether ITC can be taken on. That's what I was mentioning. It was rule 38. Whether ITC can be taken on reverse charge paid. Yes, obviously. Dealer, unless and until it is block credit, you can take the credit. A dealer came out for composition scheme, but failed to avail the ITC on stock in hand within the prescribed time limit. Is there any option to avail the missed credit? No, there is no option. Is there any other questions?
Go ahead with next session.
Chat box.
Some might have got repeated here also. See, if not, so we'll go ahead with next session.
What about tax paid on items supplied as sales promotion? For example, jeweler gives a gift like rice cooker. If you have paid tax, you can take the credit. ITC in 2B, but supplier has not provided invoices. When to claim the input? Only when you receive the invoices, because one of the condition is you have to receive the invoice. Okay. Can we make export with payment of IGST in 1 month and without? No. You have to opt it in the financial year. Beginning of the financial year, LUP, are you going to pay and take? Is ITC required for return of items? What is your question? ITC required to be reversed? Yes. Dealer is clearing and forwarding agent. It is still not clear whether exporter can take ITC of ocean freight. Kindly repeat, during export of goods, Indian exporter pays GST on ocean freight. They charged by the Indian exporter at 5%. Okay. So whether GST can be availed by the exporter, obviously he can avail. Employer given new car to employee. In terms and conditions, I saw one condition that if employee resigns within 3 years of employee need to pay the ITC claimed on capital goods. I don't understand what was that. One car, yes, on motor vehicle, we are ineligible to take the credit unless and until we are in the same line of business. What is the GST rate? GST rate you have to check for the specific SAC code only. Yeah. Car we cannot claim input tax credit. It is ineligible credit. Any other questions? Can we switch between LUT and export with payment of GST in the same financial year? No. Any other questions? Can we claim ITC on capital goods second hand? Second hand capital goods, we have value of supply provisions. It is like sale price minus purchase price, provided you have not claimed ITC. That is what is the condition. So if you are going to claim the ITC, then the value of supply will be full value. It's not sale price minus purchase price. GTA services received for the purpose of exempt outward supply. Partly has paid tax under asset. Can we? So whenever your outward supply is exempt, you cannot take ITC. Okay. Any other questions? All supplies are covered under RCM from registered to unregistered. No. There are certain notified services and notified goods on which RCM is applicable. Okay. Any other questions?
Ma'am, we'll go with the next topic.
Okay. So yeah, the material will be shared by SIRC people. Now let us see the GSTR 3B. That is what the council member was also mentioning. 1 second. I'll share the screen once I open the GST 3B. Yes. Now this is the GST 3B table 4. So whatever ITC is pertaining to import of goods will be given under 4A1. 4A2 is import of services. 4A3 is reverse charge. 4 is inward supplies from ISD. 5 is all other ITC. Input tax credit reversed on account of, say, rule 42 and 43, that is input and input services we saw on formula T, T1, T2, T3, all this. That reversal you have to give as per rule 38, which you have reversed. That you have to give. And 43 is in case of capital goods, that reversal you have to mention. And section 17 subsection 5, ineligible credit. So earlier what happened was, when we are giving the all other ITC, we were giving the amount after subtracting ineligible credit. But now they are clearly asking us to mention separately what is ineligible credit separately. And so when you're giving the amount as per all other ITC, you have to give the total amount. Say for out of 100, 100 here and 10 here. Earlier, what we were doing, we were mentioning 90 directly. So apart from this, any other reversal, so wrong going to reverse, that will come under others. All other, any other details, ITC reclaimed. ITC reclaimed is, say for example, which you reversed, if you don't pay to the supplier within 180 days. So you have to reverse the ITC. Now you are going to, after payment, after some point of time, you make the payment. Then you are going to claim it again. So that amount you have to mention here. Ineligible ITC under section 16 subsection 4 and restricted, ITC restricted due to place of supply rules. So this is, especially this happens in case of immovable property. So in case of immovable property, place where the immovable property is located, that is the place of supply. So if you don't have a registration in that particular place, you cannot take the credit. So that amount you have to mention. Ineligible ITC as per section 16 subsection 4, whatever is lapsed, that you have to mention. So this is the amendment which has come under GSTR 3B. I see some more questions. A dealer is doing the business of C&F, clearing and forwarding. They receive invoices for sea and air freight charges along with IGST. The same dealer reimburses the freight charges from customer within Tamil Nadu, whether they need to charge CGST and SGST or IGST. They received invoices for, okay, same dealer. Now, where is the dealer located? That is a question. Can we claim GST at 12% charge for under construction commercial property? No ITC. If possible, kindly share calculation sheet with example how to take ITC in GSTR 3B. Okay, link for downloading. Calculation sheet as such. See, I don't have a calculation sheet as such. So this is the explanation which I can give using this live GST 3B sheet I don't have. Supplies are covered under RCM from registered to unregistered. Can you mention few important supplies? GTA, then you have legal service, insurance agent service, recovery agent service, then long-term lease by landlord to promoter, transfer of development rights, security services. So all this will come under reverse charge. Any other questions? So I am done with my presentation. Dealer is doing the business of clearing and forwarding agent. They received invoices for CE and air freight charges along with IGST. Okay. The same dealer reimburses the freight charges from the customer within Tamil Nadu. Whether they need to charge CGST and SGST or IGST. Now, where is the dealer located? That is a question. So, insurance advisor not required to register in GST, right? Insurance advisor means the insurance agent, not required, because anyway the insurance company only is going to pay the taxes under RCM, so not required. Okay, the clearing and forwarding agent is also located in Tamil Nadu, and they are going to reimburse the freight charges from customer within Tamil Nadu. They need to charge CGST and SGST. Any other questions? Okay. So hope the presentation was useful to everyone. So if you don't have any questions, we can wind up. I can wait for another 5 minutes. If
Yes, we wait for 1 or 2 minutes. I hope you took all the questions from Q&A panel, right? So
yes,
in
yes.
chat box also you took both.
Yeah, chat box also I saw.
So the presentation, the document, the Word document will be shared with us, right? So we can share it
Yes,
with the participants. Maybe
amount paid to supplier outside India for old years without invoice. The supplier is outside India and it is import of service. So we have to have an invoice without invoice. So what is your question? Amount paid to supplier outside India for old years without invoice. So what is your question? You have mentioned the statement. What is your question? Date of liability. Amount paid to supplier outside India for old years without invoice. What is the date of liability? The date on which you pay the taxes, because when you don't have any information regarding your date of invoice or date of payment, all this, the time of supply will be date on which you pay the taxes. ITC against restaurant income at 5%, which was not eligible for ITC. Where to show in? It will come in others category 4B2. RCM. Okay. Any other questions?
there are no more questions. If there is any questions, they can write it to your mail ID, right? When
Yeah, they
time
can write it
permits,
to
you
my
can
mail ID.
respond
Yeah,
it
there are two more
shortly.
questions.
Yeah, you can take it.
One dealer located in Chennai, they charged IGST on air freight. Is it right? No, it is not right. At the time of sending goods for job work, e-waybill only, assessable value to be mentioned, no need to mention tax. Yeah, yes, assessable value to be mentioned, correct. No taxes. It's not a supply. Okay. So thank you, everyone. So thanks for your interaction and patient listening. So I'll be sharing the material with the SIRC team and they will share it with you.
Sure. Thank you. Thank you so much.
1 second, sir. One question is come. Regular dealer converted to composite filing GST or 8. Can he make corrections in previously filed the GSTR1, he has to make the corrections. Okay. Thank you. Thank you, everyone.
Thank you so much, ma'am. On behalf of SIRC Chairman, Secretary, Office Bearers in the absence chair, we thank you so much for the time spent here on virtual session and knowledge enrich the GST input tax credit. We look forward to have you for much more sessions in future for any physical or SF. Thank you so much.
Thank you, sir.